How's it going, everyone? Good morning. We've got a good live today. Lots of stuff to look at. We're going to be starting with a general overview of the market here, but then I have a few trade ideas that I wanted to share with you, as well as a trade that I've been seeing a lot of people talking about that I would actually recommend to stay away from. And the stock we're going to be looking at for that is Baidu. So Baidu is a stock that a lot of the retail market's been looking at. Things moving like crazy. IV ranks at 100. So you have, the Wall Street bet types saying this thing's going to the moon. Let's buy some vol here. You have the tasty trade types saying IV ranks at 100. Let's short some vol here. But what should you actually be doing? How should you be taking advantage of this? Or is there no trade at all to be taking? That is what we will be talking about on today's live. TAN's another one that we're going to look at. But before we get into that, let's just take a look at what's moving today in the market. So we can see that across the board, sectors and the indexes are pretty much up. USO took a bit of a hit today in terms of its volatility. Volatility dropped, but you can see vol is up 4.5 points on SPY. And, in terms of dollar gains, we're seeing IWM making these huge moves. We're seeing SPY up a few points, up 0.3%. Looking like a green day in the market, but we are also seeing this macro volatility picking up, which is something that's very interesting. Normally you would see volatility picking up when sectors are down, but today we're actually seeing the opposite. We're seeing price up across the board and volatility up across the board. Oh, this hasn't updated yet? What? 2020, 1230. No, I think it has. Oh, well. PA roll call. What's going on, Jekka? What's up, Ned? Steve, what's going on, man? So the first thing that we're going to talk about right now is our position on lit. Okay, reason we need to bring this up and, is because we're actually down on lit right now. Right? We sold lit at a pretty high implied volatility, but implied vol is just staying bid. Eric, what's going on? Yeah, implied vol is just staying bid right now. We sold the far dated options. We're basically looking for a chance to, see that level of implied volatility come down. So we're not too concerned that we're seeing, this big move today. We don't have too much of that gamma exposure because we're so far out in time. Obviously, we are delta neutral at inception. So the fact that it's been trending to the upside, right? We're seeing, in the last few days, the thing's gone from $57 up to $61.50. That's hurting us a bit, right? But what we're doing there is we're hedging our delta as we go. So we have a threshold that we set. We're basically, okay, if we're carrying, let's say, we don't want more than 100 delta, and now we have 200, well, we're going to hedge 100 of it to bring us back down to that threshold. So things are still looking okay. I'm still, pretty invested in this position. But as you can see, this is the nature of trading, right? I put on my trade. I have a view. It's not going my way right now, but I still hold this view, so I'm still in the position. Now, if this thing continues to rip to the upside, I'm probably going to have to get out. Or if vol increases, 5 points more, I'm probably going to have to get out of the position because at that point, I have to accept that I'm wrong. But as it currently stands, it's still a trade that I'm confident in. I'm still happy having my money in this position, being short vol on lit. And I'll continue to give you guys updates as we go. Now, I can see some of the guys in the chat here talking about BABA. And that's actually a part of my analysis for why we do not want to be short vol on Baidu right now. So Justin, you're going to find this really valuable. It'll maybe give you some ideas as to what you could have looked at to avoid that trade on BABA. So right now, let's take a look at Baidu. And we'll type in Baidu here. So one of the things that has everyone attracted to Baidu right now is this really high IV rank. This was actually at 100 not that long ago. And what's happening, what that high IV rank is basically signaling to us, if we pull up this implied vol, is that the level of implied volatility is extremely high relative to what we see historically. right? So we're back towards the top of the range, what we see for IV for Baidu. Okay? Now, common knowledge tells us when implied volatility is high, we want to be selling it. Thanks a lot, Ned. Right? Implied volatility is high, we want to be selling it. But here's the thing, right? We want to be the real thing is we want to be selling implied volatility when it's high, when realized volatility is low. Okay? So here's the thing with Baidu. Not only is the realized volatility or the implied volatility high, the realized volatility is actually through the roof. And remember, volatility clusters, and in times of high realized volatility, the market actually gets it wrong a lot of the times. They understate how much it's going to move. So let's see if I can open up this whiteboard. I think I have some. One second here. Come on, Microsoft Whiteboard. Don't do me dirty. I knew that would be there. Okay. So, right, remember this. Volatility doesn't just go high and low and then high and low. It actually works like this, right? Volatility comes up, we're going to see it stay up for a bit. Comes down, we're going to see it stay down for a bit. So right now, we're up here with Baidu. Why, if the realized volatility is up here and the implied volatility is also up here, well, selling this puts us at risk where we could still be on the wrong side. And we don't want to be taking on that kind of a risk. So what we want to see is a stock where the implied volatility is high, yes, but the realized volatility and our forecasts of future volatility are low relative. So that is one of the reasons why I would be staying away from Baidu right now. And if we pull up BABA as a comparison, we can see something sort of similar. Right? We come here, we take a look at this huge spike in implied volatility. And then we have the huge spike in realized volatility to go with it. And if you had been selling vol going into this big move from 215 up to 236, you'd have been on the wrong side of the trade. Because sure, the implied volatility was high. You know, according to common knowledge, right? Tasty trade methods, we should be selling this. But it goes to show you that it's not quite that simple. Maybe the implied volatility is high for a reason, and what that's usually reflected in is if the realized volatility is high as well. So we need to be on top of that. All right? It's the main reason why I would not be selling anything on Baidu right now. Anyone have a different view, a reason why Baidu might be a sell right now? Or some thoughts about what's going on with Baidu? While we're waiting for any responses there, I want to showcase something that would have been an unreal trade. We've talked about it a little bit over the last week. I know some of the guys in the PA chat have talked about GSX, but it basically happened, right? We were talking about looking at a short vol trade on GSX, and it would have been an unreal trade. You know, I personally wasn't in it. I've been looking at GSX for a while with all the news around it about the stock potentially being fraudulent, right? Forging their revenue numbers, and it was way too much. Yeah, Kyle, exactly. We can't trade this anymore. The stock is banned for us. We can't trade it. But in the last 2 days, implied volatility has been absolutely crushed. So I came over here to the term structure. Check this out. I plotted the term structure for GSX as it was on the 28th, and I plotted what it is today. And look at what happened. In the front month, right, the 10-day and the 20 days here, they got absolutely crushed, right? We're trading at 111 implied vol. It's trading at 69 implied vol right now. Got absolutely destroyed. So being short vol here would have been really good. Let's go back to the vol insights for a second. Right, there's a lot of different things you could have done here. All of these were pretty much elevated. You could have come in, if you wanted exposure to just the level of implied volatility, you could have come here, gone to GSX, maybe traded, 60 days out, let's say the 14th here, and you could have literally just sold something at the money, right? Something like this would have worked amazing. right? You would have had a trade like this. Now, of course we're ahead in time now, but you would have seen, the drop in implied vol of like, I don't know, what was it, like 25 points? And because it was so high before, you would have made even more. But you could see that on a 10 lot here, you basically made $5,000 in the last 2 days, probably more since the level of implied vol was so much higher before. But this is the type of trade that I would have put on if I had done the due diligence to actually take this trade. It's a tough one to really call. Obviously, the level of implied volatility was so high, but sometimes we always have to ask ourselves, why is it high? Right? A lot of news going on around GSX. You have news about funds adding to positions for it. You have news that the revenues could be fraudulent. Last earnings came out, everything was okay, but there's still all this uncertainty floating around the stock, which is why the level of implied vol is so high. And we can't, taking a trade like this would have required really understanding what's going on and trying to formulate, do we agree or disagree with how risky this thing is? Right? And if you had decided that it was being overpriced, well, you would have made a lot of money in the last couple days. Now, one thing I was scanning for today as well was I wanted to find some cool skew trades, see if there was something that I could take advantage of. One stock I was looking at was Overstock. I don't really have any personal bias on Overstock. I don't really follow it, but I was noticing all of this skew here. And I was thinking to myself, well, maybe there's something fun we could do, structure out like a 1-3-2 fly. Let's actually see if there's any others that might be worth doing it on. What's APPS? If not, we'll come back to Overstock. All right. CIEN. Was that getting acquired or something? Here, let's look at Dropbox. Look at this. 45 to 51. Okay, yeah. So let's take a look at Dropbox. Maybe we'll try and see if we can do a 1-3-2 call fly. What we're basically trying to do here is find a trade where if we have some sort of directional bias, or if we wanted to get a good risk to reward trade, maybe there's something we can throw on here by taking advantage of the skew for a stock. So what I'm seeing here is this 1-3-2 fly we can try and do on Dropbox. So let's take a look at it. All right, trade about 30 days out. Let's take a look here. Do we have enough liquidity? Yeah, it should be okay. So stock is trading at basically $23. So let's price out this straddle. 250. So we'll call it $3. Let's see. Unbalanced butterfly. 23. We'll go 26 and we'll go 27.50. Looks like we have the strikes for it. It's going to cost us 48 cents to put this on. Yeah, and look at that. We're getting a pretty good risk to reward on this trade. If we're wrong, we lose $500 on this trade, and if we're right, we can make about $2,500. So we get a 5-to-1 risk to reward, betting on Dropbox increasing in value over the next 30 days, right? And as long as it stays with it, if it increases in value between the ranges of $22 and $27, it's going to print. It's that simple. It's going to print. Right? This is what we want to be doing, right? We want to take a look at the data, see where there's something that we can maybe take advantage of. And if it happens to fit our view, we can use it to structure a better trade than just, buying a call, for example, right? If I go back to Dropbox here and I just look at an at-the-money call, I just want to buy a call here. Right, let's take a look. Right, let's compare the two. Here's what the call looks like, right? For about the same size, risking, let's drop the risk on this to about the same. Oh wait, oops, changed the wrong one. Right, so that's about the same risk there. Let's say stock, our break even, first of all, is at $24 versus for the butterfly, our break even's at $23.50 Okay, so instantly we have a lower break even doing the butterfly. And if the stock goes up to, our max profit would be $25, $26. And at $26, we'd make $2,500 on the trade. What would we make on the call at $26? We would only make $800. So we're getting 3 times reward if our view is that it's going to go somewhere between, $25 and $28. What you're giving up though with the butterfly is this really, really far out upside potential, right? If the stock goes up past 27.50, well, you're not making any money, right? You're giving up that really long tail of potential, that low probability long tail. But if your view is just that it's going to trend upwards, this makes a lot more sense, right? Obviously, if your view is that the thing's going to go to, $38 in the next 30 days, it's going to basically double in price. Well, you want to just be buying the call. You don't want to be trying to get fancy with it, trying to structure out some 1-3-2 fly. Just buy the call. So those are really the trades that I wanted to look at. I have one more that I'm going to be sharing with you guys for today that I think is starting to become a good trade again. It's something that I was in maybe a couple of months ago. The stock is TAN. But while we're going through this, let me know in the chat, what trades are you looking at today? Let's break down a couple together. So TAN short vol. So taking a look here, let's have a look at the last month. We can see that implied volatility for TAN creeping up again. We have broken 60% implied volatility. Justin, we'll take a look at that together in a second. Right? Here's one that you might actually like, Justin. Right? We're just looking at being short vol on TAN here. Right? Last time we did this, it was a really good trade. Couple things we can note. Implied vols shooting up. Realized vol staying pretty flat. Right? If we look at this, we're getting that spike in implied. The realized is not moving as much, which is a great sign. Usually something that I like to see when I'm looking for a trade like this. Very different from what we were seeing on Baidu, right? We can see here, implied vol increasing, realized vol staying down. But if we go back to Baidu, that's not quite the case. Right, we can see here, implied vol increased, the green line went up, but the blue line shot up with it, right? And we're seeing those big moves right now. So that's why I'd be staying away from actually selling vol here. But when we come back to TAN, the thing's not moving. And that makes, we had a big move today, but in general, we can see the realized volatility staying down. So what can we do with this information? Well, we could be structuring something out that gives us exposure to this level of implied vol. So what I'm thinking is looking pretty good, right? We're looking at our volatility cone here, right? I'm seeing that this is the current level of implied volatility. We're well above the third quantile, well above the mean, right? So we're seeing a level of volatility that happens about 10% of the time. And what we can do here, or a level of implied volatility, to be clear. So what I would probably want to do is take a look at something about 90 days out and look to be short these options, because these options have a ton of Vega exposure, meaning that it's sensitive to a change in this level of implied volatility. So if we see this come back down into this range here, which is where we typically see it, this position is going to print. It'll work really, really well. So let's go price it out. We'll say, let's say our view is that we should see a 10% drop in implied volatility. Well, what can we structure out to take advantage of this? All right, let's go back here. We'll take a look at TAN. Now, since I'm trading the level of implied vol, I'm going to trade a bit further out. I'm probably going to be taking a look at the Aprils here. All right, maybe the Febs, but let's look at the Aprils. And I'm probably just going to sell something at the money, right? Stock's trading at 102. So I'll probably just do something like this. We'll do this, 105. And we'll put this at 100. So this is the trade that I would probably put on. Right? What's stock trading at again? 102.5. Right? So you can see we're leaning a little bit to the downside here. We want the stock to come down just a touch here. We could obviously adjust our strikes to make it more delta neutral at inception. But what we're really betting on here is that change in implied vol, right? So what happens to this position if implied vol comes down 10 points? We're going to make a ton of money. Right? On our 10 lot, we would be up, $5,000. We can also see here that we have really, really wide break evens, right? Our break evens are 76 and 128. We're not really too concerned about, the stock moving like crazy in either direction. What we're really trying to trade is that level of implied vol. And I hope that it's clear, how we would be making money on this position. As we can see, right, if I take off this implied vol here, right, back to break even, as time goes forward, we're not really making much, right? This is not where, this is like 3 weeks, right now, this is 1 month of holding it, right? We could hold it for 1 month to make the same amount, right? But that's not really what our view is. Our view is that implied vol level is just way out of line, and we want to be expressing a view on that. So that's why we're trading further dated. Now, if we go back to it for a second, something else you could do, right? You can see here that the near dated ones are also extremely high in implied vol. But here's the thing, it's moving a lot today, right? So you could, if you think the stock is going to stay stationary, you could make money on, a little differently here by trading something near dated, right? If we come back, let's look at maybe, the Jan 15s, right? You could sell this strangle again. And let's analyze that. Cool. And now, as time goes by, you're going to be making a lot of money. Right? You see now, for us to make that 5K, we're only waiting, 10 days. But you can see our break evens are a lot tighter here, right? 91 and 114, whereas before it was like 78 and 130 or something crazy. So what we can say from this is if you think that the stock is not going to move, that the realized volatility is going to be low in the near future, you want to be trading that shorter dated option. They're still juiced up. But if your view is just that the level of implied volatility is too high, which is the view that I would personally be expressing, you want to be trading something more like this, where you're trading the further dated options, so you're not so sensitive to today's move, but you're really sensitive to that level of implied vol. And if you end up getting that drop, right, let's say even a 12-point drop, you make a ton of money. Any questions about this position? If not, I'm going to go over the one that Justin was looking at, taking a look at Crocs. Is this the company that makes the leather shoe, the rubber shoes? Let's see here. Stock's not moving today. Nice, Justin. Right, implied vol is a bit higher than our forecast of vol. Right, if we take a look at the implied vol, it's been staying high relative to realized, right? Stock's not moving that much. Implied vol is staying up. Justin, do you have any research to support why you think this might be a good short vol opportunity? Let's have a look at what the sentiment's like. Retail super bullish on Crocs. What are they coming? Are they doing like a collab with Yeezy or something? What are they? Why is everyone so bullish here? Right, pretty much no option activity today. Right, so liquidity might be an issue here. I don't know why I'm not finding it in the scanner. Yeah, it had a collab with Yeezy. That's exactly what would drive vol through the roof on Crocs. So you're saying long vol on Yeezy, eh, Ned? Parth, what's going on, man? Okay, Justin has it. Number one strong buy because of the holiday. Okay, and that's why maybe we're seeing a little bit of call skew here in the short term. But what's your view on this? Are you basically saying implied vol is too high? stock's not going to move right now? Or are you saying the level of implied vol is too high? We need to wait for that to come down? Because when I'm looking at this vol cone here, level of implied vol, maybe in the far dated is a little bit pricey, but it looks, pretty in line with what we could see for this, right? Looking at the near dated, it's pretty much in line with the median. I'm not seeing necessarily a huge edge in the level of implied vol. Where I may be seeing a trade is that the realized vol has been so much lower than what's currently being implied. The only question I would have is there anything coming up in the near future that we may want to be aware of? Right, I'm seeing here no earnings coming up. The spread between IV and RV on the relative value tab makes it look pretty good. What factors were you looking at here? RV and IV30? Okay, so we're seeing it at 1.34 right now. Peaks are about 1.44, 1.7. Right? See, this is one of those ones that look, you probably have a trade here, right? You could probably short some vol here. The real reason is this spread, basically. You're right. But this is not like a blowing my mind kind of trade, right? This is not blowing my mind. If I were to take a position here, it's I'd be trading it small. I don't know if it's really for example, my book, I have a few other positions on that I'm more confident in. So I wouldn't be reallocating capital to have a view on this. But it doesn't look like a bad idea. It sounds like you have an idea of who's buying this stuff, right? We can see the retail is extremely, extremely bullish on this. Zacks came out, put it the number one buy. Makes sense. 5 analysts made estimates. Okay. Yeah, I think it looks pretty good. I think it looks pretty good. What would I maybe do on this if I would just be short vol? Justin, just given your account, let's have a look at what the Iron Condor looks like for this trade. Was it how? That's not how I spell it. That would be it, right? I know we're focused on trading defined risk right now. So let's take a look at so the view that I would be expressing is that implied is a lot higher than the realized. So I'd want exposure to the actual moves that happen. So I would probably trade something nearer dated, like either the Jans or the Febs. So let's take a look at what the Jans would look like. The stock's trading at 62. So I would do something like this. What's the strangle going for? 62. It's going for, let's call it $4. So then what I would do is I'd come here. I would sell a Iron Condor. And I would put the sells at 60 and 65, right? So the call's at 65, the put's at 60. And the reason I'm doing that is the stock is trading in between, right? I want my at-the-money strikes to be as at the money as possible. Since I don't have a 62.23 strike, I have to structure my trade to be around that amount. So that's where I got the 60 and the 65 from. And then I'm going to go $4, $5 on either side. So on the call side going up, we'll go 70. On put side going down, we'll go 55. So this is pretty much what the trade is going to look like. Let's bring it back in time a bit so we're not seeing that. And this is what our trade looks like. Justin, what do you think about this? It's about 1-to-1 risk reward. As long as the stock stays between 57 and 67 in the next 15 days, you're going to make some good money. As time goes by, things look pretty good. Do you think this expresses your view? Do you think the level of implied vol is high? Do you think the realized vol is going to be lower? What do you think about this? Given the data that I was seeing in the terminal, this is probably what I would look at putting on. Right? Or if if you're really confident, just take off the wings, throw on something like this. Or just throw on this. Yeah, Justin, I think you might be right. Right. So what we're saying there is, sort of the same thing. You feel like it's not going to realize this big of a move. So you want exposure to the realized volatility, right? So you want exposure to that gamma, right? I actually don't think this is a bad idea if that's the view you have, right? If recently I've been focused on trading Vega, so I don't know if this is something that I would personally have on, but it's not a bad idea. It's not a bad idea at all. So do we have any other ideas we want to take a look at? Because if not, I'm probably going to wrap up the stream there. It's 11 o'clock right now. We try to keep these to about half hour, 45 minutes. Yeah, Justin, make sure you drop a like on the video before you head out. We need the YouTube algos to be nicer to us. They're not really cooperating with PA these days. Maybe I'm just a boring host for a show. I don't know. It's not engaging enough, But yeah, for those of you who are new to the stream, make sure to drop a subscribe. And if you check out the description of this video, you can find different ways that you can get in touch with the Predicting Alpha team. We have been getting more active on Twitter recently. We post research articles and trade breakdowns on LinkedIn in article format. And if you want to get to know our team a bit better, you can follow us on Instagram at Predicting Alpha, where we just post stuff from our life, working out, ideas that we're working on, just having fun on Instagram. So if you want to get to know us in, on a personal level, you can reach out there. But I want to say thanks to everyone who tuned into this live. Remember, we're here 5 days a week, Monday to Friday, live streaming our trade breakdowns, trying to find opportunities together. So for tomorrow's, I don't think we'll be doing one tomorrow because it's New Year's. The next time we'll do a stream will probably be next Monday. I know holiday seasons, even the Predicting Alpha team has to take a little bit of a break. But I believe Monday will be the next time that we're live on a stream. So come to that with your trade ideas, right? Right now, it's really been a lot of me trying to just share some ideas, walk through my morning scan with you guys. But remember, you can bring ideas here just like Justin did, and we'll take a look at them together, right? We can talk about what's the best way to structure a trade for your view. Where's the real opportunity? That's the whole point of this show. Find the real trading opportunity for a stock that you're interested in. Because when you can look beyond the chart, when you can actually look at what the numbers have to tell you, you can have an edge over every other trader out there. So thanks a lot, everyone. Make sure to subscribe and happy holidays.